Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. If you are looking for a way to approach the markets with less stress, more structure and a clear plan, then this video is for you, okay? In this video, we're just going to be diving into long-term trading strategies, how to spot the right trends, use the best indicators and stay disciplined over time, okay? If you're tired of chasing short-term trades and want a strategy that allows you to hold positions with confidence, then keep watching. All right. Before we start, make sure to hit that like button and subscribe for more in-depth trading content. All right. Let's just jump right in. Now, long-term trading is all about holding positions for weeks, months, or even years based on strong market trends. All right, and solid fundamentals. Now, unlike day traders or scalpers who focus on short-term price movements, long-term traders focus on higher time frames like the daily, the weekly, and the monthly charts. And then they also focus on macro trends and fundamental analysis. All right. The long-term traders also focus on strategic entries and exits rather than rapid-fire trades. All right. Now, this approach helps filter out market noise and allows traders to capitalize on major price movements instead of small, short-term fluctuations. Now, to succeed in long-term trading, you need a structured approach. Here are the core principles you should follow. All right, the core principles you should follow are identifying strong market trends. Always trade with the trend. All right, always trade with the trend. Identify the trend and trade in the direction of the trend. All right, trade in the direction of the trend. It is very important. Okay, look at higher time frames to determine if the market is in an uptrend or a downtrend. Also, use fundamental analysis. Economic data, central bank policies, and geopolitical events play a huge role in long-term trends. So keep an eye on interest rates, inflation reports, and GDP growth. Okay, set clear entry and exit points. So instead of reacting emotionally, plan your trade entries based on technical analysis and fundamental signals. And also practice risk management. Even in long-term trading, risk management is key. So use proper stop loss placement and avoid over leveraging. Now, when trading long-term, you don't need a cluttered chart, all right, with too many indicators. So I'm just going to recommend 3 indicators that work best for long-term strategies. And the first is the moving averages. All right, I'm going to recommend using the 200-day moving average. You can use the 200 EMA. It's a great tool to determine the overall direction of the trend. If the price is above, because you're talking about long-term trend, right? Long-term trading. So if the price is above, we're going to be looking for buy opportunities. If the price is below, we should be looking for sell setups. Another indicator that I'm going to recommend is the relative strength index. Okay, it helps identify overbought and oversold conditions to time better entries. A reading below 30 might indicate a good long-term buy zone. All right. Then another indicator is the Fibonacci retracement. It's a great tool for spotting key levels where price might reverse or continue trending. So these tools help you build a strong long-term strategy without overcomplicating things. All right. Now, one of the biggest mistakes that traders make is not managing risk properly. Just because you are trading long-term doesn't mean you should hold trades recklessly. Okay. So here's how to manage your risk. First of all, use a stop loss. Always have a stop loss in place to protect your capital. Consider placing it below key support or resistance levels. If it's a buy trade, you can set your stop loss below key support. If it's a sell trade, above key resistance, a good place to set your stop loss. Okay. Then adjust your position size accordingly. Since long-term trades hold for weeks or months, use a smaller position size to account for wider stop losses. All right. Finally, stay disciplined. Don't let short-term market movements scare you out of a good trade. Okay, so stick to your analysis and trust your strategy. Finally, patience is the key to long-term trading. Okay, markets will have ups and downs, but successful traders don't panic. All right, so here's how to stay committed. First of all, you might want to try out having a trading journal, right? In case you do not see, or you have not seen the need of a trading journal, you can just decide to try it out. Okay, give it a trial. All right, and know if it is something that you are going to enjoy. You might be surprised at the results of it. So it's important that you track your trades and review your performance, and trading journal helps you do that. Okay, also limit your screen time. Unlike day trading, long-term strategies don't require you to stare at your charts all day. All right, by the way, too much screen time is not exactly very, very great for your eyes. So it's also, beneficial for the health of your eyes, right? For your eye health. Do not stare on your screen 24 hours, right? Not that you're going to be staring at your screen 24 hours because you have to go to bed, right? But I just mean you don't have to be on your screen all day. All right, 10 hours is even too much for you to be on your screen, right? I don't think it's good for your eyes. So it is important that you pay attention to both risk management and proper setups and strategies that will not demand your constant looking at the screen. Okay, so that once you have set up your entries, your exits, basically you have paid attention to the necessary information required for you to execute your trades. Once you have executed your trade, or once you have set your necessary orders, you can just leave the screen and allow the trade to play out. Even if you are a day trader, you don't necessarily need to be on your screen all day. Although scalpers have to be on their screen for the period of time that they are scalping, okay? But a day trader may not even need to be on the screen all day, depending on, the kind of strategy you are using still, right? Because once you have already put your checklists in place, you know the particular things you are looking out for, you can set alerts, right? You can set alerts on your platform, your MT4, right? If it's MT4 you're using, or TradingView, whatever platform you are using, set alerts so that when a particular price point has been reached, you're gonna get your alert. And once you get your alert, you can set alerts for you to receive it through your email, or maybe a pop-up, maybe a sound. Yeah, so just have to be paying attention. You don't necessarily need to be on your screen. You can actually be, going on with other activities for your day, right? While your charts are running, and perhaps, your alerts are set so that when a particular price point has been reached, perhaps one of your requirements before you enter a buy trade or before you enter a sell trade, once it has been reached, or once a requirement has been met, then you can come back to your screen and execute your trade. Okay, that's the reason why it's good to have a properly planned out strategy, so that you will only be looking out for the requirements for that strategy. Meaning you don't have to be glued to your screen, because you just need to ensure that specific requirements are met. And for those specific requirements, unless if the requirements are something that demands your eyes glued to your screen, you can take advantage of alerts. You can take advantage of, email notifications, or pop-up alerts, or sound alerts and all of that. Okay. Now, in the case of long-term strategies, this type of strategy does not even require you to be on your screen for too long, because definitely it's a long-term strategy. All right. So always set your trade, manage your risk, and let the market do its thing, basically. All right, that's what I'm saying. And that is it. You now have a solid foundation for a long-term trading strategy that can help you navigate the market with confidence. Okay, if you found this video helpful, smash that like button, subscribe for more Forex content, and hit the notification bell so you never miss an update. If you have any questions about long-term trading, drop them in the comments below and I'll be happy to answer. See you in the next video. Happy trading.